Hello traders, welcome back to my YouTube channel. It's been a long time I never posted a video on this channel. So today we're going to be talking about risk management, how to always protect your capital in the financial markets, in Forex, so that you will not blow all your accounts. So today in this video, I'm going to be explaining how not to lose all your trading capital, how to use the proper risk management in your trading. This could be one of the reasons where you're failing in your Forex trading journey, and it's one of the reasons where you're struggling as well. So in this video, I'm going to explain in details how not to lose all your capital, how to risk only 1 or 2% on your account. So I'm going to first start with the pair we have on the screen, the EUJPY. So as you all know on the channel, before we dive into any explanation, we first of all want to go to the chart to see analysis in the market. So I'm going to first explain a little bit about the trend. You know, if we are trading, you first of all want to know the direction of the market. You want to know where you're supposed to be buying, where you're supposed to be selling. So the first thing you want to do on the chart, you want to know your direction. So for example, let's say the market is in the uptrend. We all know that if the market is in the uptrend, you're making higher highs and higher lows. So in case you're a beginner, you don't know what is high highs and lows, I advise you go through my channel. I have so many videos that explain about how to identify a trend and read market structure. So in this video, I assume that most of the subscribers already, they have an idea. In case you are new, please go through the old videos so you can get a bit of an idea. So now back to the chart. We all know that if the market is in the uptrend, the market is making higher highs and higher lows. And when the market is in the downtrend, the market is making lower highs and lower lows. So this is how we identify a trend on this channel. So we'll make it simple. The high highs and high lows is where a market is in the uptrend, meaning you will want to be buying. And then the lower lows where a market is in the downtrend, we really want to be selling. So I'm going to be diving how you can risk only 2% of your capital. So as you can see on the screen, I have my FX book. If you are new, you don't know what is my FX book, please just go to myfxbook.com. Try to open an account where you can follow the economic calendar, to the news, and also to get more tips of the market. So, but in this video, I'm going to be using my FX book, how to do position sizing, because the position sizing is going to explain to you in details how you can only risk 1 or 2% in a trading journey. So as you can see, I already clicked position sizing. So the first things we're going to be looking at here, these are advert. Let me just delete it. The first thing I'm going to looking at on the screen is to do a position sizing. So let's say, as you can see, we have the currency, we have the account currency. So this is what you have. If the account is US dollar or euro, this specifically explain in details because people are from different parts of the world. Maybe your country use the euro, use the USD, use the JPY, and the JPY. This for the currency deposit in your account. So I'm going to be using euros because I deposit in my account. And then this currency pays the pair you're trading. So let's say you're trading euro USD. As you can see, we have so many currency pair. So in this example, we're going to put euro JPY because it's what we have on the screen. So we're going to be using an example for the euro JPY as well. So yeah, so after you select the pair you're trading, the account size. So the account size is how much you have in your account. So in this video, I'm going to be using an example of just $1,000, for example. And then how much I want to risk on my account size. I only want to risk 1 or 2%. So in this video, I'm going to be using 2%. And then stop loss. So regarding of stop loss, I'm going to go back to the chart to show you how to press a stop loss. So as you can see here, we say the market is making in the uptrend is making higher highs and higher lows. So in this video, let me remove the drawing tool. So as you can see, we currently have the market as a downtrend on the euro JPY. So basically, we only want to be selling on this pair. So now let's go to the basics of how to identify a trend. How do I know that this market is on the downtrend? I'm going to put on the drawing tools. As you can see, previously this market was in the uptrend on this level. The market was making higher highs and higher lows until we finally get the break of this previous structure here. So automatically we want to get the break. We know that automatically the trend have changed from uptrend to downtrend, and then the market pull back and then go straight away down again. So automatically I'm going to be using this area as my resistance level. So I'll be waiting for price to come back to this area and then go down. So now in this video, I'm going to remove the drawing tool. So we're going to anticipate that level for our area of value, meaning where we can put our stop loss. So now, if you want, for trading view, if you want to calculate your pips, you can come to the ruler here, you click on it. So let's say this is where I want my stop loss to be, right above the moving average. So I'm going to put horizontal lines, so it's going to be a little bit easy explainable, so that it's not going to be confusing. All right, so here is my horizontal line. I'm going to change it to red because we are selling in this market. And then I'm going to put where I want my stop loss to be. So let's say I want my stop loss to be right above this moving average here. Okay, now let me remove the drawing tools. Let me put a horizontal line here. I want my stop loss to be right above the moving average. So I'm going to delete this one. I'm going to change this to yellow because that's where I want my stop loss to be. All right. So this is the example for this video. I'm going to take the measurement tools. This tool is to measure how many pips my stop loss is. Okay. So I'm going to put the measure tools. I'm going to drag it exactly to where the yellow line is. So as you can see, there is a number here on the chart. It shows where you see the 34. Right here, as you can see, the figure is changing because it's fluctuating a bit. So I'm going to drag it up to see how many pips exactly we have on the screen. All right, let's take a ruler to get a clear example. So I'm going to drag it up. As you can see on the screen, we currently have about 45 pips. So you forget about it where you see the 0.459, 0.28, you forget about them. We just focus where you see the 4, 5.9. So that is our pips. So if you see that figure, it can change. If I reduce, it's going to change to 35.8. And I'm going to put it exactly to the yellow line. It's going to be 45. So let's just say it's 46 pips. So I need to come to this my FX book. I'm going to put in this place to say stop loss 46 pips. And then the tracer, you leave it as 1, and then you click on calculate. All right. So you see, for my $1,000 capital, I'm already risking $20. So you see, and I'm going to be trading with 0.06 lot size. So this is to show you that no matter if I have my $1,000, I'm only risking 2% of it, which is going to be $20. So you see, this it makes it very easy and very simple. So you're going to be trading with a very peace of mind without no stress. So this is how to calculate your position sizing to avoid not to blow your trading account. It's very, 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 very important in your trading, and also for the take profit tools as well. So I'm going to put a horizontal line exactly where I want my take profit. So now if you are risking 46 pips or 45 pips, you want to make ×2 of that amount. In other words, so that your win to reward ratio, it needs to be very high. So let me drag it down a bit. As you can see, my take profit need to be ×2. So 45 plus 45 is supposed to be 90. So I'm going to put it here, we're reaching 93, exactly where the average. I'm going to adjust this my line for it to be exactly at where it is. All right, so let's do the measurement again for our entry. Let's say our entry is here for this example. We have 90, is it 90? Yeah, we have 97. All right, so exactly where this arrow is going to be 97. So yeah, and then for the stop loss rules, you see this 1.61072 is going to be our take profit. And then for the stop loss, exactly where we put it above the moving average, the numbers here for the 45 pips was here. So it's going to be 162.57. So now let's say, for example, I want to sell this market. All right, 1 minute. I'm using TradingView. I'm trying to link up a few things. All right, let's see if I want to sell this market. So for my stop loss, this is where I'm going to enter in the stop loss box. These numbers, which is 1.62.571, and then for the take profit, this is what I'm going to be using for my take profit, which is 16.172. So it's going to give me a exact 1 to 2 weeks to reward ratio in my trading. So I hope this explanation helped. It is how to do the position sizing. If you need more details about this, please let me know so I can be making more videos about this. Thank you so much to you all who have subscribed to the channel. If you're not subscribed, please hit the subscribe button. While you wait, I upload more videos in the upcoming week. I wish you all be happy trading in the new week's coming. Stay green. Happy trading, everyone.